All right. Welcome back, everybody, to the Founders Korner. In today's episode, I have, again, a very special guest for you guys. His name is Kyle Konoski, and he is a philanthropist, an angel, and everything you can possibly imagine, including being a VC himself. So today, we're going to be talking to him about what it's like to raise money as a startup, what he sees on a regular basis, and maybe some suggestions for you guys on how to approach angels. So I'd like to welcome Kyle. Kyle, welcome. How you
Thanks for
doing?
having me. I'm doing great. Thanks for having me. Really appreciate it. I'm looking forward to having a cool conversation. I wish I was there in person, but
Oh, I know, I know. So, by the way, for everybody, we actually the office we had rented for our podcast room actually is going through renovations now. So we're actually out of a room. So we are in my humble home for this episode. And Kyle, yeah, and unfortunately, Kyle and I love hanging out with each other. So this was sad that it had to be done remotely, but here we are. So, Kyle, why don't you tell us a little bit about yourself and your background and whatever else you want to share with the community?
sure. Yeah. So I guess I call myself kind of a serial salesperson or growth person. So I'm a growth strategist by trade, I guess, coming out of
I can attest to that.
a lot of sales and marketing background, and now doing some consulting work with a group called Peer Guidance.
Oh, very nice.
That has a motto of purpose before profit, or purpose and profit. So it's great working with a small boutique consulting firm, working with a bunch of different awesome early stage companies, working on early stages of growth and fundraising and financial structuring and marketing and sales and a bunch of other
All the
things.
fun stuff.
All the fun stuff, all the
Yeah.
building stuff. I love the building part. So
Yeah.
anyway, check out the website if you wanna check out our services.
We'll put it in
I'm
the
also,
comments too. So
yeah,
if you want to check it out, we'll put it in the comments section. So feel free to go in there as well.
for sure. Yeah, we'll stick it in there. And then I work in our family office in town. We're kind of third generation oil and gas kid from Alberta, so we do some work there. Broad kind of investment base, and I'm working on kind of expanding our venture portfolio in the family office and making family office connections across the country, and trying to bring some attention to our growing ecosystem here in Alberta around venture. So doing that, and then I'm also on the board of not-for-profit called Impact Society, which is provides youth mental health programming through schools and municipalities, and
Yeah.
so kind of teaches teachers to teach mental health wellness to youth, to create the really strong, resilient leaders that we need in the future.
Yeah,
Um,
I love that. That's one of my favorite things you're working on, in my opinion. I mean, I like
yeah,
everything else you're working on, but like that's one of the philanthropist things that I love that you're working on that.
well, I appreciate it, and yeah, they're a really innovative, kind of small but rapidly growing organization, and they really take an entrepreneurial kind of a startup approach
Yeah,
to not-for-profit, which is why I love it. So
I
yeah,
was
we'll
gonna
put them in.
say,
So,
being small is not a bad thing. It's actually we move
no,
faster.
yeah, for sure. Yeah, no, that's why I love it, because it's really nimble. We're doing some really creative things there. So yeah, we'll stick that in the comments too. Check them out, and keep an
Yep.
eye out, because we're making moves there too. Um, and then I manage my own investment portfolio personally, and
Yeah.
deploy pretty decent amount of capital over the last 8 years or so into early stage companies. So from
How many deals? If you're okay sharing this, how many deals did you
yeah,
get involved with?
I think I'm in about I think I'm in about 20, and I've probably looked at
Yeah.
thousands of deals or something like that. So like
Yeah.
we're pretty selective. Like it's growing. I think it might be a little more than 20. I went a little trigger happy last year. I think, but
You know what? We're blessed because we were one of the ones that you invested in. So
yeah, well, I love what you guys are doing, and yeah, really happy to be part of it. And yeah, enjoyed the conversation we just had before we kicked into this podcast. So
yeah, it's always having. I
but
just
we'll keep it quiet for now.
Yeah, yeah. We're not going to share those secrets.
Yeah,
That's
yeah,
later down the line.
yeah,
So you know, you seeing 1,000, startups coming to you, and I remember we had an event and we did like a Dragon's Den style, or some Americans will think of as Shark Tank. Um,
yeah.
we did that kind of style, and as soon I noticed that we were doing it, and we announced everybody who's on the chair, which is you, me, and two other people. Immediately after that happened, I noticed you were almost like it was like blood in the water. I saw startups just hovering, and they just came towards you. So how does it feel being bombarded by startups on a regular basis? Because I can see it. Like it can be a bother at times.
Yeah, I mean, there's a lot of action. I mean, I really enjoy it. I mean, I'm trying to be, a little more conscious about my time. I've got a,
Right.
young daughter now, and so family time's important to me as well, and
Yeah.
just trying to balance that. But I love startup. I love people with ideas, with passion. I get fired up, and I have kind of business ADD myself, so
Get
I'm
in
like,
there
oh,
everywhere.
look, a butterfly, what I mean? Like, I love that stuff too. So that event was, the corridor event was perfect for that. And I go to lots of stuff with Innovate Calgary, USeed, and
Yeah.
Foresight in Vancouver, and some stuff out east as well. And I mean, I'm just really optimistic about our ecosystem. And, I'm happy to offer just a little bit of advice. And the more I can learn, the more deals I see and the more businesses I see, the more effective an investor and then partner and consultant I can be as well. So it's a two-way street for me.
It's actually funny you say that because I do truly see you as a business advisor as well. Like you are quite intelligent when it comes to, navigating the business world and just kind of like I mean, you and I sometimes feel like we talk the same language on a regular basis because every time we have conversations, I'm like, that's exactly what I was thinking. How are you saying that out loud? Right. So it's like, get out of my brain.
Yeah, yeah, I feel the
But
same way. I
yeah, we're
feel
always in line in terms of like how to run a business, how to, approach culture. So I actually love having those conversations. That's why like every time we have conversations, they just last longer than it's supposed to.
yeah,
But how do you take the approach on investment? Like, because you can give advice, like I'll give advice, but doesn't mean I'll want to invest in it. So what's a spark for you? What brings you the attention you want to see?
yeah. I mean, for me, like early, especially really early stage investment. I mean, there's only so much kind of modeling you can do on
Yeah.
kind of the TAMs and your pro formas and what you think the market opportunity is.
That's
You know,
all I
that's
care about. You have to tell me your market opportunity. Whatever
yeah,
financials you gave me is bullshit.
yeah, yeah, exactly. So it's all fugazi until it's
Yeah.
it's real, right? And but I think those things are important. It's
Yeah.
important. That's how you address a market opportunity. But I think for me, it's really the team. It's the people. You know what I mean? Who are going to bring it. Push it over the line. And that you can have a technical founder that's built a really cool mousetrap that has real market potential.
Yeah.
They can be the leader of the company for a certain time period. But that type of person needs to be really coachable. Might need to bring
Yeah.
on a business person, so it might not be the forever CEO. Let's say, you know what I mean. So I think people that are coachable, that are flexible, that are really good at telling their story.
Yeah.
I think I'm biased to like sales forward
Yeah.
leaders because
Yeah.
I think you can build the perfect thing, so obvious, like a no brainer, market thing. Still need to friggin' sell it, man.
Yep.
So
We
I
say
think
that
that
all the time. We always tell that to our founders. We're like, that's great that you have this idea, but if you can't sell it, no one can.
yeah.
You
So
can't
those are
hire.
yeah, you're absolutely right. Sorry to interrupt. Yeah,
No,
no,
no.
I love. I'm a sales guy, so I love
Yeah.
talking.
You and I both.
um,
You and I both.
yeah, no, but that's yeah. So it's the people, and then like a real kind of some sort of validation around how they hope to achieve those kind of hockey stick projections that you
Yeah.
see in those decks often, right?
Every
And
single time.
that's right. So I like to, I don't really tend to ask like super hard questions. I don't think to founders. I just want to understand them and
Yeah.
understand what their vision is. And I like second time, first time founders. It's like it's pretty rare you're going to step up to the plate the first time and hit it out of the park.
Yeah.
But it does happen. And to be honest, meeting founders on their first go around and how they handle the difficulties that come along with being an early first
Yes.
time entrepreneur
Yes.
um, teaches you a lot about them. And even if they don't hit it out of the park, or even if it's a complete flop on their first one, you'll see how they deal with that, and you'll know, no matter what, they're going to learn something.
Yep.
But you see how they process it, and then that maybe then you're the first one in on their next thing, which is the thing. So I think there's a relationship development perspective from an investor that we're not looking. We have a portfolio theory, right? Like
Yeah.
we're not looking that every deal is going to be a smash hit. We're trying to kind of play the odds, partially there's relationship development in my personal portfolio theory.
Yeah.
Going to probably pay off on the next one because I'll get in earlier.
Yeah.
That type of thing. And then, there's ones that you think are just a monster opportunity that, you think there's going to be, multiple layers of funding, so there's liquidity potential. I mean, I'm getting into kind of the nuances of
Yeah.
portfolio theory, and there's a bunch of different people that do a bunch of different ways. But
I actually love what you said. That watching the first time founders, because there is going to be stumbles, there is going to be situations where you can really get an idea of that founder. And on this podcast or anywhere, I always say to be a founder or an entrepreneur, you need to have grit. You have to have grit. Like it's such a hard thing to do. I was just listening to a podcast the other day that was between two VCs, and the guy literally turns around and goes, I'm gonna say it. I know people are gonna hate me for saying this, but if you cry as an entrepreneur, I don't feel bad for you. Right?
you should cry sometimes.
Yeah,
be okay with it.
Absolutely. I've cried, but like
Yeah.
the result is how are you going to come out of it, right? And that's his point is if it wasn't hard, everyone would do it. And I love what you said, because it's like, okay, I'm investing in the person. I'm trying to see what they're like. And then if they're actually good, it may have been a product misfit, like miss market fit, but on his next venture, it might be a really good one. And it's easy to invest in that person, because you're going to say, if I give this guy 50,000 or 100,000, whatever it is, that he's going to work his ass off to make sure that 100,000 turns into something.
Mm-hmm.
And I love that.
And if you don't, then you lose. Like, I mean, portfolio theory, if you're going to deploy, let's say, between $500,000 and $1 million personally, let's say in the next couple of years or whatever, that's your plan.
80% or 90% fail.
50, put 50, and then, but if the 50, the benefit is you get to see, you get visibility into that human being, and they build more resilience out of that, then that there's a higher likelihood of success on the next one, and you likely will be able to come in earlier or help them create or find a deal, like that they'll be a good fit for place founder. You and I have talked about that, right?
Yeah.
So anyway, so it's all part of it, I guess is what I'm saying. But yeah, the people is the key, man. Like, you can have a brilliant idea, you don't have the right people, it's gonna die on the vine.
So what would you say is your checklist? I mean, like, okay, I get it. Number one is your team. I'm 100% with you on that. What else do you look for? Like, here, I'll kind of give you an example of what I'm like as an investor. If I'm ever looking at a product and it happens where people approach me and say, hey, like, would you invest? I'm like, I mean, no, because I have all my money in Corridor, but if I were, I would be looking at these things. I would be looking at timing. So what's the timing of the product in the market? The team is my second biggest thing. Thirdly is the what do you call it? The go-to-market strategy. And I think that's where most startups fail. I don't know if you notice the same or not, but like, go-to-market strategy is really hard to achieve properly, and product really is like the last thing, to be frank.
Yeah. So what I do is I draw like a circle and I put team in the middle of it.
Okay.
And then I do hub and spoke. And so then I draw, like, I write who the team members are, and then I write I would write go-to-market fit. I would write like addressable market, like, pro forma, like the projections, and then I would link those people into the effective, like, buckets that they can help in. And so then, like, I kind of like scale it that way.
So you kind of do a mind map.
Yeah, a mind map or like a matrix or whatever. Yeah.
I love that.
And then you can assign points to it. I kind of gotten I just do it in my head now. I just draw it. I just go like, is there enough?
I mean, 1,000 deals coming your way. Yeah.
I'm just like, are there enough lines to go to market in the team to make it, like, do they have enough, or do they need to add team members, and all that? And then that speaks to the profile. Like, it's all connected, right? I think it's a good place to start with team, and then have all those other aspects. And then, like, do they have enough resourcing, from a team perspective to address all? Like, and it doesn't necessarily mean they need to right now. It's just like, in order to accomplish these goals that you've stated that you want to achieve in your deck, when you draw it on fashion, you can see, really clearly, what type of resourcing they might need.
And
Right?
and you've gone through this enough that you'll know if the go-to-market strategy is going to work or not, right? Because like I find first-time founders, they're a little more ambitious, right?
Yeah, yeah,
They're a little on the excited side, so they just assume that if I put 10 strategies out there, at least 5 of them will work. Whereas you
hmm
and I both know that maybe 0 will work. You're gonna
yeah,
have to
yeah.
pivot.
We're gonna start from the beginning for
Yeah,
sure. Yeah, no, I think, like I said, I think addressable market is important. Like if
yeah,
the market's, in the tens of billions or, like some market potentials are in the trillions now. So,
yeah.
like if you can get 1% of that market, you can build a really big company, right?
That's right.
So that's good. But then what does getting 1% of the market mean? Like, what do you have to do to get there?
Yeah,
Because that's going to dictate how hard it is or not. It's not the percentage, the small percentage of the total addressable market doesn't necessarily equate to like ease of commercialization. You know what I
uh-huh.
mean?
Yeah,
It's just looking at the nuance of that and like the reality of capturing whatever market share you need in order to build a big company. Like you asked me what I looked for, as outside of team, I look at like addressable market for sure,
yeah.
but then the actual commercial, like real commercialization potential of whatever the product is.
And
So
And whenever you see pitch decks, do you see it the same way as I do, where they're kind of like too general, too broad? And because I think with startups, most of the time, they don't need to think that far ahead. Because you and I both, as investors, know you're going to get to series. The question is, how are you going to get yourself to series A or B, right?
yeah,
Because that's really what I need you to do in order to make sure you survive.
yeah,
So
yeah,
they don't attend that enough in their pitch, I feel.
yeah, for sure. Love that. I think it's important to understand the big picture because
Yeah, of
investors in
course.
early stage, if we're going to take this risk at this level, it needs to be a really large, scalable company in order for
Correct.
us to
Yeah.
like multiple, pretty significant multiple returns.
Yeah.
Especially if your money's tied up illiquid for 5 to 10 years, right?
Yeah.
More 8 to 10, eight to
Depends the
12.
country and
Depends
city.
on depends on where you are, what industry,
Yeah.
what blah, blah. But a lot of risk, a lot of illiquidity in this in this asset class, and so I think you need to be conscious about that.
Yeah.
And but so you need to understand the big picture. There's big potential, but
Yeah.
then if you're raising seed rounds or bridge rounds or pre-series A stuff in particular, you need to say like use of proceeds elaboration is important. Like, so what are you going to do this year? Like you're going to
Yes.
raise 250. You're going to raise $2 million. What are you spending it on? And then what are you spending on this year? Like I see so many use of proceeds slides that say sales, marketing, operations.
The
It,
most
it
general thing.
drives me fucking insane. I don't know if you can swear on your podcast,
Oh,
but
you can go nuts.
drives me fucking insane.
Yeah.
So you need to elaborate at least to some degree. Now
Yeah.
it's okay to put it there, but be like and not have it like a big paragraph of your whole sales strategy because that obviously clouds the deck. But I mean, you need to be able to speak to it
Yeah.
really, really accurately, at least from this point. Now you can use kind of your pro forma, like you can use basic sales conversion
Yeah.
math, to try and come up with, a fairly realistic market,
Number.
market adoption curve, right? So, but a lot of people don't do that level of depth in their
Right.
pro forma and their projection development. So, I just would encourage entrepreneurs, early stage entrepreneurs, even though that you read these the big long pro formas or big long projections over 10 years, like obviously that's not going to be accurate, but you
No.
can be relatively accurate in like a 1 year timeline
Yes.
with kind of basic math with your current resourcing or facilitated the resourcing that your fundraising is going to facilitate, right?
Agreed.
So I would just encourage them to think big because you want to show the opportunities big, but then when you're asking for the current, like whatever the current raise is for, then be really specific about what those funds are going to be used for.
Yeah, because yeah, you're right. They end up just going into that 5 year, 10 year plan, and I'm like, honestly, I don't even think. I think in 2 years you're gonna change your mind. Like, there's gonna be so many things that you're gonna get hit by, and it's just
Yeah.
unpredictable things. Like, you cannot predict what's gonna happen. Right, right. Like
Yeah.
quarter 1.0, quarter today, it's completely different. It's a completely different
Mhm.
model.
Mhm.
So no, I'm with you on that.
Yeah.
In terms of like evaluation and like really taking because Canada and the States are very different, and you have you are very lucky in the sense that you get to experience both. um what would you say is the environment today that we're dealing with? Like what is the what like how are people evaluating markets today now because of the whole interest rate being so high? Cheap money is kind of harder to come by. So like, you know, those bigger deals are not going through anymore because a lot of them are they spent so much money in their cash flow that they barely have runway, so it's almost scary to invest in those guys. What's the landscape looking like for seed investors right now in your mind?
Yeah, you know what? I'm a little more optimistic as an investor in terms of seed and like pre-series A, let's call it,
Right.
investment. Like I think as an investor, unfortunately for entrepreneurs, you might not get these, big valuations that you were getting kind of pre-COVID or
Yeah.
whatever, or even during COVID sometimes. Um, but
Very
for
undeserved in my opinion. You really the evaluation some people were getting
some
were
of them
just
were getting a little bit crazy. You know
yeah.
what I mean? Like, plus 10 million without any sort of commercial validation
Yeah.
is pretty absurd in my opinion. But anyways,
That was
that's
one
arguable.
city. That's just San
The
Francisco.
market, the
Yeah.
market will dictate what your
True.
company's worth often, but a lot of those companies have since done down rounds and
Yeah.
whatever else. And so there's also I think a theory that I have and lots of other venture people and angel investors that if you finance at too high a valuation or you raise too much money, it can have a really
Mm-hmm.
negative impact on your growth. And so
Yes.
to some degree, there's this inflated kind of ego that you have this brilliant idea, but capital allocation and you spending your money wisely
Yeah.
can kind of be thrown out the window when there's this big momentum, and you're paying big multiples.
You're
Or,
100% right. You can't so many people do that. It's not always a good thing to go for the max amount.
no,
It's not
yeah,
because you have to perform at that level. So, you know, yeah, I'm with you on that one.
yeah, and for sure, and then for sure on the raising too much money side, you can over dilute, and then the founding shareholders don't have enough skin in the game, so they're not really motivated anymore.
Yep.
Like it's a bunch of nuance in there too. But anyways, on the valuation side, I think the struggle I think is going to really come, and you can read about. I'm kind of just regurgitating I think information that's available, but they I think I agree that the valuation like pain is going to be really with like public, and
Uh-huh.
you've seen it public markets with public
Yeah.
technology stocks or large privates that are post Series B, what
Yeah.
I mean, or trying to raise Series B rounds or trying to raise, trying to do pre-IPO raises and stuff like that. You're seeing a lot of stuff come off on secondary because people are looking at,
Yeah.
taking some liquidity and that's driving, they're coming off on secondaries on discounts. And so there's a lot of stuff I think in there that people are going to get stung and they're going to
Mm-hmm.
get tagged in terms of valuation. But I think companies that are brand new that are coming out that still have, they're raising seed round to go and do market validation testing, do
Yep.
develop their MVPs and do all that. So it's going to take them a couple years to build some momentum towards actual commercialization.
Yeah.
Hopefully, in that time, markets have had a chance to kind of turn around a
Rebound.
little bit.
Yeah.
So as an investor, I mean, I like that because I can get it at a more appropriate valuation now
Yeah.
than I used to, and I think they've got a couple years to get do the shit they need to do before they really are making a big commercial push or looking for big partners. Post Series A, looking for big venture leads that might skewer them on valuation
Yeah.
now. In a couple of years, they can build some momentum, and the market, I think, hopefully will have shifted back a little bit. But nobody has a crystal ball, and I don't know. But
Yeah.
I like that things are a little cheaper now.
I'm actually with you. I believe the same thing. I actually just wrote a post on LinkedIn on this exact same thing where I said investors are gonna kind of start like even the big guys, even the VCs, they're gonna go towards the seed level, right?
Mm-hmm.
Because the big ones are scary and there's not enough return on them anymore. Not right now, not next 2-3 years. But at the same time is the whole mentality behind grow at all costs and I'll fund everything is kind of mute now. Like if you look at like Postmate, they're not even the largest of the delivery services, but they're worth billions, right?
Yeah.
You don't have to be number one anymore because of the fact that technology has evolved so much and utilization has gone up for users. You can be second, third, fourth, fifth, and you can still be a massive company. Um,
Oh yeah.
and I think now it's like, okay, how are you planning to get to profit? How are you planning to be a success and sustainable?
Yeah.
Like if you cannot raise in 18 months, will you go bankrupt? Like that's the question.
Yeah.
I feel like
Yeah.
behind most of those series A, B, C's, right?
Yeah, yeah, totally agree. Like I think, like a lot of it's just kind of inflated valuation, right? Like
Mm-hmm.
people get really excited about, technologies and market opportunities, but you're right. I think there's two cool like neat themes there. I think there's a big opportunity for if you have a new disruptive idea.
Mm-hmm.
You've seen a lot of like it's not reinventing the wheel, it's refining the wheel, right? And so
That's
like
right.
there's a lot of and there's these a lot of decks, they're showing 100 billion dollar or tens of billions of dollars, addressable markets. Well,
Yeah,
you don't, like I said, you only need a small percent. There's enough for multiple players.
that's right.
If you just apply, basic sales principles and use your funding, appropriately, and have strong finance people on your team, have strong growth people on your team.
That's right.
Develop partner, do all these things. There's basic business principles. You can go and build a pretty significant business when the market's that size. You just have to go about it systematically. And I think there's going to be money available, you know, more so to if you come up with an idea now and you're seeding it
Yeah,
because you just need a couple years for the market to turn around. That's all. And I
yeah,
just think, valuations. I think there's probably going to be opportunity in the technology, both public and maybe secondary private markets or whatever other raises in the private space that you're going to get things at a little bit of a discount because
yeah.
they'll be hammered, right? Like there's always buying opportunity, and it's usually when the Warren Buffett philosophy, when everyone's running for the hills, right? That's when
You.
he's buying. So
That's right.
I think there's some applicability to that in venture as well. I mean, I think it's kind of a universal thing, but you have to be cautious. I mean, I think there's a lot more down to go. I think
Yeah,
through 23 here and potentially into next year as well. And so you just kind of you can't be in a rush as an investor, and there's always another deal. My dad always instilled that in me that there's always another deal around the corner. And
yeah,
I got stung early in my investment career, just like getting really excited about deals and
yeah.
writing a too big of a check or just writing a check too quickly or whatever. And so I think I've kind of hopefully tempered that a bit. Still learning, but I think that's a really important philosophy to have is that as an investor, you have this luxury of there's a lot of deal flow out there. As
Yes,
entrepreneurs, your challenge and your goal is to cut through that noise
yes.
and make an impact to the investor. And so
So one of the things I'll notice with I love that you said you used to write big checks because it's that concept of FOMO is a big thing in investment, right? It's like fear of missing out on that deal, right?
yeah,
And there's a lot of people that I know um, that utilize that to almost manipulate, which I don't like personally, but you're right. It's investors kind of now have kind of taken that step back because that's what it was with like FTX is a really
yeah.
good example of FOMO, right?
I'm gonna
Like
say
they
Bitcoin is the
yeah, they
number
didn't
one.
even do their due diligence on it. Like they weren't even checking to make sure that the financial controls are there to make sure that this thing isn't going to go bust. Yet
Yeah,
here you are with Kevin O'Leary and like Sequoia and all these big players putting in cash and you're just like, "What?" And the funny part is during his meeting with Sequoia, he was apparently, I don't know if this is true or not. If it is, Sequoia, I'm sorry, that was a terrible decision, but he was apparently playing video games
yeah,
while like and the guys were like, oh my god, this guy's a genius. And it's like
yeah,
how do you see that as a genius? He's just playing you. He's showing you
yeah.
that he doesn't actually care what's happening. Like, you know what I mean?
He knows more about the space that you're investing in than you, and so
Yeah,
he can just like you're not willing to do the level of depth of education. And so
that's
this is
right.
interesting. You look at Madoff and like these type of
Yeah,
situations that occur, right? A lot of it is because is relationship development. Like it's
yeah,
really just a sales mechanism in investing. Like a lot of investment is just sales driven and relationship driven. And so
that's right.
due diligence, even though the banks and large family offices and stuff, they claim to have these really deep due diligence frameworks, and that a lot of the successful deal flow that comes across is through relationship, and some of the dangerous
Yeah.
deal flow that can potentially come across is from relationship as well. So you do need to, I think, this is kind of on the family office side or just general investment advice, is
Balance.
really stick to a pretty strict kind of, solid due diligence framework
Mm-hmm.
within whatever risk mandate that you're comfortable with, right?
Right.
And then, have a diverse portfolio. Certainly, I don't have all my money in venture capital or angel investing. And I have,
Yeah.
sometimes I'll take a full year off if I feel like I'm really over deployed
Yeah.
while I'm waiting for liquidity, right? Like, so you just need to be conscious about where your money is, where your deal flow is coming from, what your due diligence framework is, what your filtering mechanisms are.
Right.
Because even your best friends or your friends you've known for 30 years can bring you a deal and say, hey, I got I mean, Madoff to me was crazy that some of these really sophisticated guys had all their money with them.
I
And it's
don't think they
greed.
cared, to be honest, with the
Yeah, well,
Madoff thing. I don't think they cared. They probably had like a hunch that this was happening, but they just didn't care.
no, when you're boasting the returns like he
Yeah.
was, people who preyed on people's greed, which is
Yeah.
what people that have Ponzi schemes or like
100%.
FTX and Madoff and other ones have had, is that's what it is. They're like, nobody else performs this good, and then he was, there was liquidity when things were good. He was paying
Mm-hmm.
out
Yep.
money, and so like you're like, well, this is real, like because I'm
Yep.
getting real money, even though he was paying you with other people's money. He's showing these fictional returns, and so you're like, it validates it. And so it's a dangerous thing. So anyway, and not to say like, potentially if I was in that mix, maybe he would have tricked me. Like, I'm
Yeah.
not saying, I'm just saying you can potentially avoid getting punched in the face too many times by deals like that if
Mm-hmm.
you have these frameworks in place for checks and balances, and you have, even though a friend brings it to you, you still go through your process.
Yeah.
And I think it's an important, you know, lesson.
What okay, so we're coming up to our time, so I don't want to, take up too much of your time, but if you were to
Okay.
give any advice to a startup right now, like let's say a startup comes up to you and goes, "Hey, I'm struggling. I'm struggling to find angels. I'm struggling to find anyone to get in." And let's assume he is a good founder. Let's assume he has a good product. So let's make those assumptions. How do you suggest a founder taking approach with angels or angel groups or VCs for a seed level investment?
I always ask, like, the first thing I ask CEOs, especially with like seed stage,
Yeah.
is how much time in your day do you spend selling?
Yeah.
How many customers or potential customers do you talk to in a day?
Probably
And if
zero at
and
that point.
if they say anything below like 6 hours a day,
Yeah.
then they're not doing enough.
Yeah.
Like, you need to, like, I know it seems like there's a million things to do. There's all these operational things. There's all these things to do.
Mm-hmm.
But ultimately, you need to go into the market. Like, I mean, you've done some market validation, hopefully.
Yep.
It's crazy how many founders don't, like, they build something without doing any sort of market validation at all.
Yeah.
Like, did you talk to anyone in the industry that you're going to try and
Yeah.
sell this into? No, but we worked in it, and we
Yeah.
know that. Who cares?
80%.
Like,
That's 80% of startups.
go
80%.
confirm even that maybe somebody would pay for it is good
Yeah.
enough to like try and build it. Like, no,
I'm a
sometimes
genius. I know exactly what they want.
yeah, I mean, there
Yeah.
is a lot of that. I mean, I'm not saying everyone, but there is this, like, oh, we figured out this perfect mousetrap that affected me when I worked in oil and gas 5 years
That's
ago,
right.
right? And so now I'm building this thing, but you just really need to validate that people will pay for it. So I asked, that's a big question that I ask, and
Yeah.
so first of all, before we're going to go in and fix all your problems with going to raise money or doing whatever, like, how much time a day do you spend selling your thing
Yep.
or trying to sell it or
Yep.
talking to potential partners for partner channel
Mm-hmm.
relationships? How many potential investors have you called this week?
Right. Yeah. It is.
Like, so
It's sales on both sides. Yeah.
if you're trying to raise money, spend 6 hours selling and 6 hours like doing investor calling and follow up.
Yeah.
Do that. If you do
What's the
that for a
best?
quarter,
What's the best
I
way to
guarantee.
get? Like, if someone wants to get in touch with an angel, what is the best way to do it? Like, is it LinkedIn? Is it email? Like, how you can't even really find them on email and calling. So
Yeah, LinkedIn is okay. I mean, I get some messages, from founders through LinkedIn. Sometimes it's like, that's a tough cold call
yeah.
unless you're paying. Like, LinkedIn has some services you can pay for that are a little, that make it a little bit more kind of a
Better.
gentler touch.
Yeah.
I think, like, literally, calling angel groups. Like, there's a bunch, like Valhalla in town here.
Yeah.
There's TBT, Thursday Night Traditions is a a strong angel group here that runs multiple cohorts a year.
Yeah.
They just kicked off a life sciences summit, a clean tech summit, and I can't remember the other one. There's 3 simultaneous summits running across five different cities, I think, in the
Yep.
prairies right now. Like, so those are great networks. Reach out to organizations like USeed and Innovate Calgary.
Yep.
Go to events. Go to every single, like, go out in the streets. COVID's over. Get out
Yep.
there. No mask. Get in there. Go to every event you can. Meet everyone you can.
Networking.
If you're a CEO, like I said, you need to sell half your time. Like, okay, let's say a third of your time should be spent on selling to your customers, building partner relationships, and doing that, validating that you can, like, move this business forward.
Yep.
A third of your time should be focused on, like, getting into the investor ecosystem and this entrepreneur ecosystem in the region that you're in, and in other regions if you can.
Yep.
Particularly in markets that you hope to expand to.
Yep.
And then a third of your time should be spent on kind of like just refining the operations of your business and doing the little pivots that you need to, and dealing with your team and doing all that. Like, at the beginning, like, the majority of your time should be spent on sales and developing investor relationships.
Love that. Love that.
In my opinion.
All right. Well, Kyle, thank you so much. I really appreciate your time and you being here. You're one of the most, I love having conversations with you, and everything that comes out of your mouth is just like, I love everything that you say. So I really appreciate you being here on this podcast. And I know for a fact our listeners are going to love this stuff, because again, this is one of those things that's a struggle for them, right? It's just like, they don't know how to put themselves in the mind of the angel. And I think you did a wonderful job today. So thank you for taking the time and being you.
Yeah, thank you very much for having me. This is a blast. Hopefully we can do it again some point. And
absolutely,
entrepreneurs, get out there, just get in the mix and meet some other entrepreneurs. That also helps as well.
100%. Create a group. We're going to leave your links down below. So if you're interested in, his philanthropy and in the group that he's part of, Pure Guidance. We're going to put the link down below on YouTube. So check it out. If you need to reach out to Kyle, he says that he gets a lot of messages on LinkedIn, but yeah, thank you all for being here. Again, this was a great episode for you guys to learn a lot about what and how angels think. And I think that becomes a critical part before you go start pitching. So understand what it is they're looking for and pitch that. Because a lot of times, like Kyle said, and I said, you get a lot of random pitches where it's just like nonsense, and it's just bring it, focus it, and drive it. All right, guys, until next time, if you have any comments, subscribe. Please let us know down below. Subscribe, like our video, and we'll see you guys next time. Corridor out.